Hello everyone. Today we are doing an SRP trade breakdown on Euro USD. This is a trade we took last week on Euro USD. So let's take a look at it. Let me share my screen. Right, so this is Euro USD, and this is the monthly time frame. So first of all, if you look at the monthly time frame, you will see that yeah, even though that Euro USD is long-term bullish, you will see it's long-term bullish. Why do I say so? If you mark here the monthly time frame, you see RBS. RBS means resistance becomes support. So between the 2023 and 2024, it was trading within a very tight range. Then in 2025, it broke away from this range, but it has not retested it. Right? SRP is all about where exactly do you buy? You buy from the discount zone, and where do you sell? You sell from the premium zone. So on the monthly time frame, you could see where price is coming to. Price is coming to this zone. So from 0.618 is the premium zone. All right, this is the equilibrium. So you can see where price is coming to. So price is probably coming here, and then from here it will go up. So, if you look at it, the bigger picture is that it is bullish, but currently on the monthly time frame. So let's remove this. Currently on the monthly time frame, it is bearish. So let me remove this. It is bearish. So first of all, it came to this monthly resistance. This is a supply zone on the monthly time frame, and you have a bearish fair value gap here, and it couldn't break above it. In fact, it has not broken above it since May of 2025. Every time it comes here, it sells. Every time it comes here, it sells. All right. It couldn't break above it. It did a massive sweep. After doing that massive sweep, it started selling. It started selling. And if this move ends like this, it's going to break these lows. If it breaks these lows, that is a massive, that is even more sales. All right. That is more sales. We're going to go down to the weekly to see what is going on. That is more sales. It means it's actually coming here. This is the next resistance, on the monthly time frame that it's probably going to come to, and it may get there before the end of this year. So let's go to the weekly time frame. Already on the weekly time frame, you could see the same thing. It couldn't break above that. It just swept it. And now on the weekly time frame, it has last week it finally broke below all these lows and gave us an SBR. So in SRP, we have two major ways that price moves on the higher time frame: SBR and RBS. So for sell, when price does SBR, what it means is support becomes resistance. It means that all these prices, price was buying from the support zone. Price was buying from this support zone. So it came here, it bought, it came here, it bought, it came here, it bought, it came here, it came to this low again, it bought, came to this low. And as long as this support zone, no candle has broken below it with the body of a candle, price will continue to buy from there. But the problem now is the moment you have a higher time frame candle, weekly candle, the candle break below that support zone with the body of a candle. What it means is that this that sellers have taken over the market from buyers. So support becomes resistance. Is that this whole place, this whole zone becomes a resistance zone, right? This whole zone becomes a resistance zone. So any buy will now become a pullback. Any buy will become a pullback to a sell zone, right? That was even what price did. Price broke this low. You can see price broke this low here, then came to this support, which is a weekly fair value gap, picked order and sold. We're going to look at all of that. That was the sell. We are going to look at that. So now it has broken this low again. It currently tapped. It's trying to. It's facing resistance here, and if it's selling further, Be selling further. This is where this is the next resistance. It has broken below uh, the current resistance here. The next resistance is, maybe you could say, this one, and then here. All right. So weekly is also bearish. Weekly time frame is bearish. Weekly was, before we took that trade, weekly was bearish. It broke these lows. All right. So it broke these lows. As of that 2 weeks ago, it broke this low. SBR. So it gave us SBR. So meaning that support has become resistance. So this whole zone has become resistance. So since this was where we took the trade from this zone. So let's just focus on it. So the weekly time frame, price broke below. You want to know where do you enter from. So this was how last week began. Price just did this, and then last week, that was how last week began. So you go to the daily time frame and you could see it clearly. So as of Monday, last week Monday, this was what price it price sold further. So the week opened, and then after price broke these lows, it sold further. So let me remove this. So on the day time frame, price broke all these lows. You could see the rejection here, and then it broke all these lows. And then sold further to show you that yes, it's actually selling. And then it created a resistance here, a massive resistance here and here. All right. So you just need to know that price is not going to just pull back to a sell zone, back order, and then sell. But where do you so in SRP we use the weekly time frame, monthly time frame, and the daily time frame to know the direction of the market, long-term direction of the market, to know exactly where market is going. And then we use the 4 hour to mark the range. We use the 4 hour time frame to mark the range, the tradable range. So that is SRP means S means structure, R means range, and P means PY. So the structure is bearish. So what is the range? So what price did was, we know that price is going to come up. A lot of people were expecting that sell around there, that price will come up around there. But sometimes price can come to a particular zone. It may not come to that particular zone you're looking for, but it may come close to it. It may use another key level. For example, you have bearish favor gaps here. So price did not come up here again because it was a trending bearish market that has started. All right, it didn't come up here again. It has ranged a lot in this zone. It has ranged a lot. It didn't come up here again. So it didn't need to mitigate everything. What it did was, when Monday started, it broke all these lows, did the rejection here, and then from Monday to so from 3rd March to 8th of March, this was what it created. It created this zone, it created it, and then broke below. It broke below, it created it and broke below, broke this low. So let's mark this. So this was where it created the SRP, right? It created the sell SRP in this zone. So how do we know exactly what to do here and where to take a trade? So what price did? It created this range and then broke the lows, giving us an SBR, a 4 hour time frame. All right, it gave us an SBR on the 4 hour time frame. All right. So what we have here, first of all, price is at a massive 4 hour bearish fair value gap. It formed a range. It ranged here and then broke the low. So this is the range. So let me now mark the range, the 4 hour range. This is the beginning of the 4 hour range, and this is where it ended. So in SRP, when the range is complete, you use your Fibonacci and mark the full range. The high of the range, this is the high of the range. That is 1. 0.5 is the equilibrium. Don't sell from 0.5. This is the low of the range. 0 is the low of the range. All right. Right. You so What is it? Where do you sell from? The premium, you sell from premium zone. Premium zone starts from 0.618 to till 1. Right? What will make this setup invalid is if price closes above with the body of a candle. If price closes above. SRP1 is where price comes to 0.6 and gives you your confirmation on the lower time frame. SRP2 is when price comes to 0.7, between 0.7 to 0.8, and gives you confirmation on the lower time frame and sell from there. And SRP3, 3 SRP is where price does 100% pullback and it does not break above the high of the range. Rather, it sweeps there and gives you your confirmation there. Right. So as long as price do not break above this, it means that price wants to use this zone. Price is going to sell from this zone. It has already given us confirmation. It has done SBR. So what do I see on the higher time frame on 4 hours before I enter a trade on 1 hour, or between 1 hour time frame and 15 minutes time frame? What do I see? What I need to see is I need to see price form this key level and then give us an SBR. All right. I need to see price come to this zone, and I want to see the failure swing. Price was doing higher, higher, low, and then it came here and it failed and then broke below. I want to see that failure swing. I want to see the bullish exhaustion. You could see the bullish exhaustion and then price broke below. I want to see the break, for sale. I want to see that break below clear and very obvious. Very, very clear, very obvious. I want it to be very, very obvious that yes, price broke below all the lows, and you want 4 hours because 4 hour is exactly the tradable time frame. Then time frames that are higher than 4 hours, daily, weekly, they give you direction to show you exactly where market is going to. 4 hour is a tradable time frame. 4 hour is actually show you where to enter a trade from. So price came here and go below, support becomes resistance. So it means that the premium zones here are now resistance zones that price goes there, price is going to face resistance, and then more sell will continue from there. All right. So what did I do when I've marked the range? And so what I did was to mark from 0.6 to 1. I marked, so this is the entire premium zone I marked. I don't want to assume. Especially under this Trump administration, don't take any trade without confirmation. So in SRP, our lower time frame confirmation is 15 minutes, 30 minutes, and 1 hour. All right. Don't go below 15 minutes. You can use 15 minutes, you can use 30 minutes, you can use 1 hour. And if you like, sometimes you can use 2 hours. All right. So what we do next, now that we've confirmed SRP on 4 hours, we've seen the direction on weekly, on daily, we've seen the direction of the market, where market, what is going on in the market, the market is bearish, and now market has given us the exact. So on 4 hours, market will show you exactly where it will sell from. On those other ones, you know that market is selling, but your SL will be too wide. All right, and you don't know exactly where market will sell. There will be many POIs, and they are very large. If I will show you the exact place where market will sell from, and this was where it formed the key level. Is give you that sell SRP. The sell SRP. Sell SRP is SBR on the 4 hour time frame, and then you mark the premium zone because the major timing principle of the market is that you sell from the premium zone, you buy from the discount zone. You don't sell from the discount zone, you sell from premium zone. So I've marked the premium zone, which is 0.618 to 1. I now want to go to the lower time frame. I want to go to 1 hour. And then what am I looking for? I'm looking for exactly this confirmation. This hour SRP. I want to see it on 1 hour. I want price to give me this setup on 1 hour. So let's take a look at it. So this was where I marked. This was when price came there. So let me enlarge this. So this was when price came there, and price started with a bearish liquidity grab. It's making this zone a protected zone, right? Bearish liquidity grab. It didn't do it on the 4 hours, and that would have made a setup. But sometimes when price don't do it on 4 hours, when it finally comes there on the lower time frame, it does it. making that basic protect. So it couldn't break above this with a on the on 4 hours the body of a candle. If you check that zone again, it couldn't break it with the body of a candle. And instead on the lower time frame, it came there and gave us that massive liquidity grab, and then it did higher high, higher low, higher high, couldn't do a higher low. He tried again to buy again and couldn't break above this high. Just did a sweep, and the next thing we know, broke below that high, broke below the support, giving us an SBR. Alright, giving us SBR. So you will see that it close below, and surprisingly on 2 hours we have this. On 2 hours, this is what we have. It closed below all the support with the body of a candle. So closed below all the support with the body of a candle. 1 hour was not really clear, but even on 2 hours, it closed below all the support with the body of a candle. And then on 30 minutes, it closed below all the support with the body of a candle. SBR, support becomes resistance, meaning that you should now sell when price comes to the premium zone. And on 15 minutes, the same thing. On 15 minutes, it closed below all the support zones with the body of a candle. It's confirming that sell again on the lower time frame. You can see it on 15 minutes. So basically, what I now do is to now wait to enter my price has finally confirmed it on the higher time frame, confirmed it on the lower time frame. So the lower time frame must be in alignment with the higher time frame. This is many people fail and they trade hits their SL is because they are taking a trade on the lower time frame and it's not in alignment with the higher time frame. Don't just take any kind of setup you see on 15 minutes. Even if you see this setup on 15 minutes, but it's not aligning with, there's no 4 hour SRP, sell SRP, there's no, the daily time frame is not bearish, the weekly time frame is not bearish. You are not following your rules, you are not doing it the right way. The lower time frame must align with the higher time frame. The lower time frame serves the higher time frame. The lower time frame respects and obeys the higher time frame. The lower time frame goes to the direction of the higher time frame. The lower time frame drives price to where the higher time frame wants it to get to. All right. So the lower time frame, if even if price is is bullish, and but then on the lower time frame is buying, no, it's not really bullish. If price is bearish on the higher time frame, and then on 15 minutes is buying just like this. It's not really buying. It's buying to the sell zone of the higher time frame. On 15 minutes, you don't just go and take a buy so like that. It's buying to the so you can see how we frame this from the higher time frame down to the lower time frame. So that's 4 hour POI, sell POI. This is what price is giving us on 15 minutes. It broke below all this low, give us SBR. So basically, I mark my Fibonacci and wait for price to at least touch 0.618. Sometimes it may not, it may just, it will give you a bearish fair value gap, maybe in that zone, which is also another block. You can sell from the bearish order block here. It gives you a bearish fair value gap, and then that bearish fair value gap is in the other block. And then if it is also in the premium zone, that is massive. So this was where I entered my sell from. All right. This was where I entered the sell. I also called it on my channel. You can send me a DM to join our Telegram channel. So this was where I entered the sell. And this is the objective target on 15 minutes. I even came out on the 15 minutes objective target. But this trade continued and met the 4 hour objective target. So this was my SL. So the SL is above this high. And so price came tapped into this premium zone even on the 15 minutes. It's also on 4 hour or on 2 hours, tapped into it. You see, even on so price tapped into it and then sold. So this is the high, this is my SL. So the thing is about 15 minutes and 15 minutes shows you clearly Is actually sometimes you even see a bearish fair value gap if you use this Nifty Sam indicator, right? And that particular zone that price is coming to, you will see the unmitigated key level there on 15 minutes. 2 hours may not show you, 1 hour may not show you, but 15 minutes will show you. So price came exactly, there was an unmitigated fair value gap there on the premium zone of 15 minutes. Also inside the premium zone of a 4 hour, you see it, and price came there. And on 2 hours, it just swept that price. That was where the sale started. This is the objective target on 15 minutes. And then on 4 hours, this is the objective target. So let's look at 4 hours objective target. It's here. This is the low of the 4 hours. This is the objective target of the 4 hours. This was where I came to. So if you're using this is the objective target of 4 hours. So in SRP, if you are using 4 hour objective target, so this should be your SL above this high. So you can just use here, and then this is your objective target. So when sometimes price may give you 1:10, but 1:10 don't come all the time. So just know your objective target. Are you using 15 minutes objective target? Are you using 4 hour objective target? And if you have trust in your system, you have tested it in hundreds of trades, you know exactly the one you are using. All right. You know your objective target and come out at your objective target, because sometimes when price hits that objective target, there's always a resistance there. What price will do is that it will retrace back and it can hit your SL before it continues. It can hit your SL before. So on 4 hours already, you see price did this LPR. It came to this zone and picked order. So even on the 4 hours, you can see how the trade played out. Yeah, SL is above this high. Some people can even just put it here just in case price wants to mitigate this zone. So, and this is 1:3. If you put it, since price has given you lower time frame confirmation, you just put it above this high. That is 1:3 on 4 hours. All right, that is massive 1:3. Then price sold for that. This one is a bonus, not like you're expecting it to get there. Sometimes it gets there, or sometimes once you get your objective target, that is fine. So, but this is the level it got to 1:6. All right, so this was the sell we took on Euro USD. If you are taking SRP, don't rush any setup. This you could see that this setup took time to form between 3rd March, and then it finally came here on 10th of March. All right, it finally came here on 10th of March. So don't worry, don't rush price. Price will give you, no matter how much price moves. It did a lot of sell. People missed this particular sell here, but it later came, and just wait for price. Don't chase price. That came to a particular zone and gave you that setup, gave me the exact setup, gave us the exact SRP setup that we are looking for, and then gave us the exact confirmation that we're looking for on the lower time frame, SRP confirmation. And we took the trade, and the trade hit the lower time frame objective target and then hit the 1 hour objective target. That is how you approach it. You risk not more than 1% of your account. That's it. If you have less than $500, use a cent account, because the cent account is the only thing that will enable you to risk less than 1 to 2% of your account. Why will you be risking $50 on your $500 account? If you lose it, you have lost $50. And if you keep doing that, in 5 or 6 trades, you blow your account. But if you don't want to use the center account, then you buy a pro firm account. That is when you have your edge, when you've mastered your edge. So that even if you lose $50, $100, you can always come back. It's not really that you've not lost $50 immediately in your lay money. Is when you finally lose the entire Profem account. Then what let's say you lost a 10K Profem account. Instead of losing 10K real money, what you've lost is the money that you used in buying the Profem. So if you use $60 to buy the Profem, that is what you've lost. But then you divide that Profem, you divide your account by 20, so that it will take you 20 trades and you risk, and then you know how much you are risking. Even if it's $20 you're risking a trade, fine. So that it will take you 20 trades before you blow that account. And someone that have their age, that someone that have mastered their age will not lose 20 consecutive trades. So, but the key to trading is it is when you've mastered your age, it is time that becomes your main age. Just continue to follow your rules consistently, risk 1% of your account or less than 1%, and then over time, if you have 60% win rate, your wins will be more than your losses. Your wins will be more than the problem that people have where they take 7 trades and they won some, and then yet if they take one trade, one loss, it let's say they take 5 trades and they won 4 out of 5. They won 4 trades. They took 4 trades and they won it. And then they now had a loss, and that loss wipes away all their profit. Inconsistent risk. The person in the trades that gave them that win, they risked maybe $20, $40. And then in the one that they lost, they got greedy and they risked $100. That $100 wiped away all the profits. So let your risk be consistent. Let it be consistent. If you're risking $20 per trade, risk $20 in all your trades. If you are risking, that is on your profit account. On your if you have a cent account, let's say you have 5,000 cents. 5,000 cents is what? $50. You see, cent gives you more leverage even, and you are risking 100 cents. That is $1. So continue to risk 100 cents in each trade. Don't go beyond that. And then sometimes you may get a profit of 300 cents. Sometimes it may be 200 cents. Sometimes it may be 150 cents. Just continue to follow your system. You will learn a lot and you will go very, very far in trading. You will survive the market and you will last in the market. So this was the trade we took. Price broke below the low. I gave us SBR on the 4 hour and came to the premium zone of that 4 hours. And inside that premium zone on the lower time frame, it still gave us that confirmation. We took it, and it was very amazing. And this was the objective target on the 4 hours. All right. So we'll drop more trade breakdowns on other trades that we take. Thank you for watching, and I hope you learned. I wish you a profitable year in trading.